Hello, everyone. Ignatius L. Jackson, CPA here with the CPA Huddle. This is another wonderful episode. I got my co-host here, Mr. Eric Pierre. What's up, Eric?
What's up from Beverly Hills? My lighting is bad, or as I show you Beverly Hills behind me, I can't right now.
Well, I really think he's in like a dump in Memphis. He's just saying it's Beverly Hills. I don't know. Is that legit? We should. I don't know.
No, I'm in Beverly Hills.
Okay, all right.
Hey, man. Oh, no, Dr. King's life ended at a dump in Memphis, sadly.
Yeah. That's true. Well, I don't know. I haven't seen the new Elvis movie too. Did he die in Memphis? Did Elvis die in Memphis too?
I think so. I think he might have. Yeah.
Oh, man, this could be your moment. You better take it easy. Be careful. Stay inside.
Oh man. Well, look at that. We're off to a good start already. So for those that may not be able to hear or recognize the voice, we got a special guest today. His name is Mark Kohler. He's an attorney with KKOS Lawyers. He has a law firm that he's a partner on. And he's also a member of the Directed IRA. I think the CFO for Directed IRA? Yep. And then he's also involved in a CPA firm. So this guy's kind of all over the place, has a lot of stuff going on. Kohler and Irs CPA firms, I believe is what it's called.
Yep, and I'm a real CPA. So
real CPA and attorney, which is
an attorney. Yes.
So
went to school way too long. I'm a real nerd.
So and he's also got an awesome podcast, the Main Street Business Podcast, that he does with Matt Sorensen, who we did an interview with as well. So thanks, Mark, for joining us. And maybe if you want, I know I talked a little bit about your background, but if you want to explain a little bit more to our listeners about yourself, and then we can get into the topic for today, which is about HSAs and HRAs, health reimbursement arrangements, how to save on healthcare. So go ahead, Mark, if you want.
You bet. Thank you so much, guys, for having me. I love to joke around and keep it light. Taxes are boring enough, right? So, just tax lawyer, helping small business owners. Love it. Grew up in the Northwest and born in Oregon, raised in Washington, which means from the Northwest, I'm a believer in Bigfoot. Want to make sure that we get that out there.
Oh, okay.
Yeah, you never know. Right now I'm in Northern California here with the redwoods. I mean, there's been Bigfoot sightings right in this area. So, I mean, if you see something behind the screen and I miss it, you make sure and alert me. So, okay, for those watching on video, this could be your sighting, Yeah. So
you never know.
You never know. So, 4 kids, and 2 grandkids now. Crazy. This year, 2 of my kids had little babies, which is, I know up to you guys, I look like I'm in my 30s, but anyway, so got a couple little grandkids. I saw a quote today: God's gift to it is grandchildren for not killing your own kids. So I thought that was a nice quote for you parents out there with teenagers. There's light at the end of the tunnel. Okay. So I just love small business and taxes, and this healthcare is a hot topic. Oh, and we wanted to talk about the, Irs Funding Act, and
the Inflation Reduction Act quote.
I guess they call it that. I thought it was let's give the IRS $80 billion to audit more people act, but they're going to throw in a
we got some people. We got people on tax Twitter that are going to fight you on that one, man. We want to hear it out because I think Ignatius and I agree with you. We don't necessarily agree with our colleagues making these whack videos about this, but.
What do they think's good about the act? Seriously?
I don't think
there's some people who believe if you don't cheat on your taxes, you have nothing to worry about.
Oh, well, okay.
It's
so
let's get into
this right now. Let's get into it right now.
To be getting audited. So, but go ahead.
Well, I think there's 2 topics here. One is why in the hell are we calling this the Inflation Reduction Act and what's in it? And then the second topic is, well, if I don't cheat, I shouldn't worry about the IRS. We can address that too. They're 2 different topics. Now, in this bill, I mean, there's a few things for electric vehicles, and I can go buy a better fridge or water heater at Home Depot and save a few $100 on my tax return. Hopefully, if you make too much money, you're not getting anything out of this. This is not a tax savings bill. There's a lot of green energy stuff in there. That's great. I'm all about helping the environment. But let's just not call it an Inflation Reduction Act, please. You know, why insult my intelligence?
Yeah.
Ready further. So, but 80 billion for the IRS, that's the big bill in this. And the IRS has been complaining for years. They don't have enough money for enforcement and everything they need to do. So anyway, it's Biden signs it tomorrow. It is what it is. So
yeah, we actually did an episode on this. I know you guys did one as well, and it's just the name is just crazy. It has nothing to do with what's going on with this thing. In fact, to me, I think it might be the opposite, you know, for at least the near term, maybe over the long term, over the 10-year period that they were scoring it over, it might reduce it a little bit, but yeah, it's not going to be a significant impact. I mean, considering where people are hurting the most is stuff like gas and food and household supplies. This bill's doing nothing to help any of those costs out.
Yeah.
So not fixing the supply chain issues or anything of that nature. You know, but I mean, if you like green energy and you care about the environment, then this is a great bill for you. If you like the IRS and you want them to come, you know, drill them more into your business or your personal life, then this is a good bill for you.
Well, and the thing was, you know, the Democrats have mentioned about auditing wealthier people, but in Hsas, in a previous episode, we looked at a stat. I think for 2020, there were 164 million tax returns filed. People making 250,000 and up was 4 out of 164, so less than 4%. There's just no way that the IRS is going to hire 87,000 agents to go out there 4%. That's just the numbers don't even say that. Also, I guess my question, a couple questions that I have, Mark, were they going to find the 87,000 agents? I made a joke. You can go to the southern border.
Oh my gosh, it's true. I don't see a line at the, you know, employment office at the IRS. You know, I want to work for the IRS, Dad, someday, please. You know, that's your plan.
Yeah.
I mean, it's a great experience, especially if you're a tax professional. I mean, I thought seriously about putting in a year or two at the IRS to just kind of pad my resume. I ended up working in the tax court. I did my undergrad at University of Utah, got a master's in tax, and I went to Willamette University in Oregon, took the CPA exam. Then I clerked for tax court and also worked for KPMG, one of the big four at the time. And so you got to pay your dues, you know, I get it, but 87,000 agents, seriously, you know, wow. Okay, but here's my opinion on this. On the second topic of the IRS getting more money, some people are like, well, if you don't cheat, you don't have anything to worry about, or they're only going to audit rich people. That's not been my experience. If any of you got a nasty letter from the IRS, it could be something completely innocuous, like, we want to look at your mileage records. We want to look at your home office expense and all that. And even if you just fly through the audit, do you know what the emotional wear and tear is and the cost of hiring a professional to help you with that?
Yeah.
It takes a lot. The IRS isn't just auditing cheaters. They're auditing everybody to find the cheaters. They don't know who the cheaters are until they audit you. So you want to be in that sifting process? I don't. So
I've had to turn mileage log. In fact, it wasn't a coincidence. I had a client that got in trouble with the federal government, and all of a sudden, coincidentally, I get a letter saying we need to see your mileage log. Now, my client did not cheat on his taxes, but the DOJ was working with the IRS, and so I turned my log. The IRS agent was shocked. It was, you know, I use an app called Everlance. Okay. And so I printed everything for that year. It was like this thick. Handed it to the agent. Agent was shocked. She just dropped her jaw, and she admitted that, oh, by the way, you should have taken a bigger deduction, but we're not going to give it to you. He's like, what? So I said, thanks.
Yeah. Well, I went off on my podcast last week, really pissed about people living under the table. I went to a farmer's market, and half of the people would only take cash, and you know why. And I would freaking went hard at him. I'm like, I'm not going to buy your shit if you're not going to take a Apple Pay or a credit card. That's ridiculous. You live in this country. You're out here enjoying the nice weather, safety, national defense, roads, and all this. And it's not right that you pay your taxes. Come on, give me a break. And so we need to pay our fair share, but I want to find every loophole and strategy I can to keep it to a minimum. But,
Absolutely.
I'm not going to cheat, but I'm going to find every freaking, we're going to talk about healthcare today, which is awesome. We got to get there, but there's awesome strategies out there. And I told these people at the farmer's market, hell, if you even reported the money, you'd probably save more in taxes rather than living under the table. Go qualify for a loan, get a home, home mortgage without being above board. So I get the IRS needs to be there. A lot of agents I've worked with are great people. They're just doing their job. And I want them to catch the cheaters. I really do. I don't want to get audited, but I do want them to catch the cheaters, and they need to have enough money to do it. So I just think that calling the bill Inflation Reduction Act is BS. Call it what it is. That's all I'm saying. You want to give the IRS more money? Great. Call the damn bill that,
Exactly. Yeah. No, you're exactly right.
Man.
All right. Well, healthcare. Boom. You ready to save some money?
Yes.
Sure.
Yes. Talk to us about healthcare
today.
Yeah.
So actually, I'm pretty into this as well. I kind of like you. This is a really hot topic for me also. HSAs are hugely underutilized, especially for corporate employees who have health insurance options that are HSAs. I mean, it's a great tool, and I think a lot of us are missing the mark on that. And so I think we even did a presentation at a summit on that topic, and that was one of the topics that I brought up was how underutilized HSAs were, and did some numbers and stuff like that. So anyways, but yeah, I mean, obviously you have a really great story, and Eric loves this story. So about what you've done with your HSAs. So maybe you can share that with us, and then maybe share a few other cool tips and tricks that you kind of know about related to them.
You bet. I've got so many good stories on health savings. And let me say this too, because I know a lot of CPAs and tax preparers and EAs follow your guys' podcast, and God bless you guys out there trying to save taxes, you ladies and men and ladies. Let me, when I say you guys, I'm referring to the men and the ladies out there, the guys comment.
You don't have to be politically correct on this channel. It's okay.
Thank heavens. All right, cool. All right. Okay.
Yeah, we say a lot of random stuff. Trust me.
Yeah, I mean, listen, I have not gotten an Instagram from a lady yet. Now that might change, but that's okay. I can take it.
Yeah, I mean, your sexual harassment suit is totally different. I mean, I wouldn't even count that. I mean, I get it. No nasty letters. But those they're piling up.
Now, Mark,
right?
I'm going to say I've never had issues with unwanted advances. That's as much as I'm going to say.
I love it. Oh yeah, I love it. All right. So all you CPAs and EAs and tax preparers out there, this is such a great topic because it really adds value to what you're doing for your clients. When you can talk about healthcare costs and healthcare write-offs and give them a little something to do this year to save some money, you just added value where they're excited to pay your bill. This is the chance to be a consultant, not just a tax preparer. And I don't want you to give it away for free either. Say, hey, would you like a consult to talk about HSAs, HRAs, and medical insurance write-offs, and how could we help you better there? Well, why don't you just all I sell is my time and advice. Book an hour. I promise you, I'll save you 10 times that. If you're not impressed with the hour of consult on this, I'll give you your money back. I've done that for years, and no one said, give me my money back. They're like, oh my gosh, Mark, I love it. They want more time. And so as preparers out there, don't sell yourself short and give this information away for free. But at the same token, get out there and talk about it and offer it. Send out an email to your clients, send them a letter and say, there are incredible tax saving opportunities this year in healthcare. Book an hour. I'll charge you X. And I promise to save you 10 times that. So that's great.
You hit a strong sword topic for Mr. Eric Pierre there. He loves talking about that. How people are undercharging themselves.
Yes, I'm on the side of that. We as tax professionals undercharge. I don't know why, especially if you have a CPA license, that our exam is harder than the bar exam, and yet we're okay with lawyers make all the money, but CPAs get anxious and they want to do S corp returns for $600.
Oh gosh. And
We
I'll say
actually
this too.
have an attorney and a CPA. Is the bar exam easier than the CPA exam in your opinion? Maybe we can get to the bottom of this answer. I don't know.
And I thought the CPA exam was harder.
Oh, there you go.
Oh,
There you
oh.
And I've taken the bar in 2 states and the CPA exam. And I had to take the CPA exam when you took all 4 parts in 2 days.
I took the last paper exam in fall 03.
Wow.
I didn't pass it then, but I took last one. I had to go to the George R. Brown Convention Center in Houston. Yeah, you're in this massive room with people. Yeah. You had to bring your materials in a plastic bag and a baggie. If it's not in the baggie, you can't have it. Oh yeah, I remember that.
Yeah. And when I took it, it was definitely harder, but nowadays you can carve up the CPA exam into sections and prepare for one and then pass that and take the other one. I think that's a fair argument that the CPA exam may have gotten easier that way. I think it has, but the bar can be really hard in certain states. California, New York, that bar is brutal. I put the California bar, New York bar above any CPA exam, but there's other states where the bar threshold's a little lower. So, okay. So with that said, people, don't worry about billing. Your clients want this. They want better service. They want consulting. They want to save money. There's nothing wrong with charging for it. The health topic is a good one. All right. So here's where I go with clients. You've got let's back up. I'll tell the story and then that will get some of you guys anxious and excited that are listening. So the health savings account is like a supercharged Roth IRA. You got to keep that in mind. So many people just forget the fact that an HSA grows tax-free, comes out tax-free, and you get a tax deduction to put money in it in the first place. It's like, and you can take out money tomorrow for any healthcare expense, and publication 502 is like a book. I mean, there's so much crap you can pull out of an HSA. And Eric will talk about maybe some health and fitness, because I know you were meeting with some docs and this, that, and another, and those are great right out of an HSA. I can go to Massage Envy, an HSA will cover that. I mean, there is so much.
Really? I did not know that.
Yeah, I know. We're talking about sexual harassment and massages all in your same show.
You should have consulted. You should have consulted Deshaun Watson. Could help offset his settlement.
Oh man.
I know his agent is an investor in my gym. Yeah, I said it. So if his agent hears it, David, I haven't met you, but yeah, I said it. I'll say it in your face.
Yeah, we're raw and uncut today, guys. Okay. So so with that in mind, if you realize now we're gonna talk about the HRA and the small business healthcare, a small business health insurance tax credit is great. I love being able to write off health insurance in multiple ways. But the HSA, I think, is the cornerstone of good tax planning. I will argue with Matt Sorensen, my partner, CEO of Directed IRA, that I think it is neck and neck. Should I fund my Roth this year or fund my HSA first? I would argue you fund your HSA first because you get a tax deduction no matter what tax bracket you're in.
That's
you
true.
Make $10 million a year and still deduct an HSA contribution on the front page of your tax return. And you can pull out distributions immediately for healthcare expenses. And third, the number one reason people pull money out of retirement accounts is for healthcare. And you're going to have healthcare expenses before you need money for retirement. And so when people are draining IRAs and 401ks before age 59 and a half, or even after that and paying tax, why are we not funding the HSA first? And so I think the HSA and Roth go hand in hand as a cornerstone or foundation of a good wealth building plan, because that's your healthcare Roth. That's really what it should be called, in my opinion. So they grow tax-free, they come out tax-free, you get the tax deduction, and you can invest it in whatever the hell you want, which I love. So, I mean, you can self-direct the HSA, and my HSA, gosh, I have 2 investments right now I love in my HSA, and then another one in my Roth. I'll just explain my 2 HSA. The first thing I did with my HSA, it's probably been 8 years now, maybe 10. I funded my HSA for $4 or $5 grand back in the day, created an LLC in Illinois, and bought the cutest little meth lab. I mean, this thing is adorable. You guys would love it. I mean, it cash flows. And I think it's pretty ironic that I have meth paying for my healthcare. I mean, that's turning the system on itself, right?
Yeah. Is that a plug to watch the last episode, Better Call Saul, tonight? But
Yeah, I know, man. Better Call Saul. He's awesome. I love Saul.
yeah.
But no, seriously, I own. You can look it up on the Secretary of State of Illinois, Kohler Rental Holdings, and it's owned by my HSA. I did seller carryback on a little $50,000 low income home that's in a Section 8. It's a Section 8 rental. There's a cute little grandma that lives in it in a very bad street that my property manager will let me drive down. But so I don't think they're actually. There's probably been meth done in that house, but I don't think it's a meth lab. Anyway, so but I've had that rental for 8 years, and it paid for Molly, my daughter's braces. I mean, this rental is growing tax-free inside my HSA, and I've had it for 8 to 10 years. Done. Then year and a half ago, one of the best shows in a long time came out, Yellowstone. You guys watched all the seasons?
No, I've not watched any of it, but I've heard a lot about this show.
Kevin Costner.
The seasons, actually.
Yeah, one of your lawyers told me that she loves that show, Kristen.
Oh, Kristen, yeah, she loves that show. Kevin Costner kills it. So in Yellowstone, which I have a home in Idaho, love Idaho, and I live about 4 hours from where they film. Actually, closer to 3 hours from where they film Yellowstone. Beautiful country, and I thought I got to live the dream. So I took my HSA, and which I funded the last 2 years, and it's just sitting there, and I had it in stocks, and I think I had a little crypto going inside my HSA, because again, you can invest in anything you want. So I formed the Kohler Dutton Livestock Company, LLC, in the state of Idaho. So if you know the show, it's the Dutton family. John Dutton is Kevin Costner. And so I took, so I formed the Kohler Dutton Livestock Company, LLC, or do I go Kohler Dutton Livestock LLC? And I even have some coffee mugs made out of Kohler. I have my brand, even Kohler Dutton. It's so freaking badass. Anyway, so I set up my company, and I have this farmer down the road, mostly potato fields. If you eat Five Guys, those potatoes are coming from my town. Anyway, there was another buddy of mine. He's actually a dentist and a part-time rancher. And I'm like, hey, I want to buy some cows, man. I'm all into this freaking Yellowstone. He's like, all right, how many? I go, and I mean, this story goes on because I mean, I'm talking this is legit. I bought 5 cows, and they were, damn it, what's the word for impregnated? They were heavy with child. No, 5.
Is that a heifer? Is that what they call heifer?
No, heifer's a baby.
Okay.
And then steer, you don't want to have me describe what happens.
Yeah, no. We're good. We're good.
Yeah, but anyway, gosh darn it. And my accounting partner, Liddell Air, he's a farming CPA. He's on the board of Western Ag. He's so good. Anyway, I bought 5 cows that were pregnant. Plus I bought the hay for the year in advance, and I paid for the grazing. Because in the summer, you don't pay for hay because they just go out and eat in the field. I don't know if you knew that. I learned so many cool things about cows. And then I bought enough hay in the barn because there's a drought coming. So I thought I'm going to pre-buy my hay. So I got a good deal on it, threw it in the barn, and I bought 5 cows. They had 5 babies. And ironically, there were 5 male calves who, so I have 10 cows now. This was last year, this very spring. We're in the summer now, but I had my 10 cows. And then in the summer, while they're out to pasture, the farmer brings the bull by, and a little wicka, 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 goes on. And if you guys need the bird and the beef story, my 5 moms get pregnant again. So now I got 5 pregnant cows plus my 5 babies, which are now steers. They grow to 400 pounds by Christmas. I mean, talk about putting on weight. And so I turned around. I was into the investment about 10 grand to buy the 5 cows, pay for my hay and the grazing. And some of you out, and I'm going to bring this around to HSA, but then I sold my 5 pregnant cows and the 5 steers and my hay, because I didn't use it all. I sold everything in mid-December. I didn't sit it out through the winter because I did the price model on how much more weight were they going to put on, plus the price of beef. So it was totally kind of fun. I was calculating everything, and I made, I sold everything for about 13.5. I was into it about 10. So I had about a 30% rate of return. And some of you cattle, farmers out there are like, what the hell, how'd you pull that off? Well, I was able to partner with a rancher that had a little extra capacity in his herd. And he said, I'll pick up these cows for you and put them in my herd. Doesn't cost him anything really. He made some extra cash on it, but I let my HSA do the investment. So my HSA owned the LLC. I had 10 grand sitting in this HSA account. It wasn't doing much. Crypto had kind of stalled. And so I was like, boom, I'm going to go buy these cows, made 3 grand. And as soon as I sold the cattle, boom, 13 grand falls back into my HSA. I got a 30% return. You go to B of A or Wells Fargo HSA, you might get 2% if you're lucky. So that's a wonderful way to build it up and grow. And so I've got a cute little rental in my HSA. I bought these cows and sold them. I'm sitting on the 13 right now. I'm debating what to do. In my Roth, I have a mining rig and I'm up to 7 cards mining Bitcoin. And I still make the same amount of Bitcoin, even though the Bitcoin's down in value. So when Bitcoin comes back, boom, my Roth is going to be sitting pretty. But anyway, the point is invest in what you know. Your HSA can make money and all sorts of things. It can buy gold, silver, crypto, real estate. I could buy into a little laundromat. I could buy into cows. And that's the beauty of the HSA is you're building your future wealth with that retirement account. It's a Roth on steroids for healthcare. So I could tell you more. I did attend the branding and the snipperoo. So my 5 bulls turned into 5 steers. It's pretty traumatic for a man to be there and watch that, but they were true. They
turned them into eunuchs, huh?
Yeah.
No, great stories. It's always important to me, to hear what people that are in the field are actually doing themselves. I think people appreciate taking advice from people who actually do the stuff themselves. And so those are some awesome stories that you had there, Mark. So thanks for sharing those. And for my opinion, I'm going to go on record and say that in regards to HSA versus Roth IRA, in terms of priorities, I actually do agree with you.
Woo! Yay!
I think it is important to fund that HSA first because it's such a powerful tool. But to me, if I'm being real, I think if everyone could fully fund an HSA and a Roth IRA every year, could you imagine where this country would be in terms of the wealth gap? Goodness gracious, we would be in a completely different situation. Like so many people would have so much wealth building going on, and just those 2 things alone. The 401k is like bonus, but if you just fund the Roth IRA and your HSA and just let that sucker grow and not pull from it too much, it's powerful. Which is another thing I want to bring up about the HSA, because I think you hinted at it a little bit, but didn't really, I think, dive into it too much. So that's the part this is the part that I think is missed in a lot of cases from people that are doing the HSA strategy. Is they're oftentimes taking money early on versus and using those HSA dollars, which to me hurts your long-term earning potential if you're doing the strategy. And instead, what I usually try to recommend is that use just your regular after-tax dollars that you have, extra dollars that you might have. Now, this doesn't work for everyone. Sometimes people really do need the money to be able to use it because they don't make enough, and that's fine. But if you do have enough where you can use after-tax dollars and still fund the HSA and just let it sit there and grow, at some point over time, you might have even more money that you can utilize to get reimbursed than you have if you were to keep pulling out from the HSA over time each year as you're funding it. And so I don't know what you think about that, Mark. Is that right up your alley too?
Oh, I love it. I know Eric's got a comment here, Eric, and then I'll comment on that. What were you going to say, Eric?
No, I think I agree with you. I would probably say fund an HSA first because there's no discrimination on that deduction on your income. Because, a lot of my clients can't fund a Roth unless you do backdoor. So I would do the HSA first.
I like to. Well, thank you guys. I'll tell Matt Sorensen you concur and that he's wrong. So we'll do that.
Please tell him that. Please tell him. You can tell Matt I said it. I'll tell Matt that if I see y'all in Austin, I'll tell him that he's wrong in his face.
Yeah. Now, Ignatius, let me throw this out. You are totally set up the conversation about the HRA. So the HSA HRA combo is really what you're saying. And before we go to HRA, let's unpack HSA a little bit more. I went and grabbed my Mark J. Kohler calendar. For you CPAs out there, I've got, even though it's freaking August, I still have people buying the calendar because it's great. I've got tables in here, all the tax tables for 21, tax resource guide, asset protection, and tables by country for the whole country on state and local taxes and income tax rates. And then it's got all the deadlines in the different months. Check it out. It's on my website, markjkohler.com. It's $25. And it's just a great resource guide. And so I had to go grab it. I just grabbed it off the table behind me. And I wanted to say, here's what the HSA deduction is this year. If you're single, it's up to $3,650, or married or head of household. So if you're stay-at-home mom, a single mom, single dad with a dependent, you can do up to $7,300. So you've got this $3,650 or the $7,300 is a deduction this year. You have until April 15th of 2023 to get the deduction for 2022. The biggest requirement in this, and I know some of you are like, Mark, you're making it sound easier than it is. You have to have a high deductible plan that qualifies for the HSA, which a lot of times is going to be a lower premium because you're saying, I'm going to go to the doctor and come out of pocket. So I have a higher deductible. So I want a better premium. Now, insurance companies used to really reward that, but they're evil. And so now the real cost of health insurance is network based. What network do you want more than what's your deductible? Regrettably. So, but anyway, the point is you got to have a high deductible plan as soon as possible for this year. You have to have it in place by December 1st. You can open up an HSA anywhere. There's companies out there that'll do it for free, but then they just want to churn your money in Wall Street. At directedira.com, you can open but HSA tonight in the middle of the night. You've got a health savings account up that you can do stock, bonds, and mutual funds and ETFs if you want, cryptocurrency if you want, or do a standard HSA and then call the law firm and we'll set up an LLC, and you can drop all that HSA money into an LLC of which you can be the manager of and go out and invest it and get the biggest rate of return you can. And so if you go to YouTube and type Kohler HSA, or go to my markjkohler.com and my blog, just type blog and then HSA. I've got several articles out there, lots of reading material. And you guys, listeners, you're all professionals. It's not hard to figure out how to get an HSA rolling for yourself and be an example for your clients and then bring it up. Now, with all that said, Ignatius goes, well, don't you want to let the money ride? Obviously he's been to Vegas playing craps and he's like, I'm going to let that money ride. I want to let that HSA grow and grow until I really need it. But I want to write off and I can't itemize. Itemize sucks. So I'm not going to itemize. And I've got the HSA money sitting there and I'm letting it ride. I'm out in the cold. I don't get a write off. This is where the health reimbursement arrangement comes in. The HRA is a 105 plan that can be designed for the solopreneur. If you've got full-time employees, the HRA is a bigger hurdle because you've got ERISA rules and you've got to include those employees in your benefit plans. But if you're a solopreneur, you can set up an HRA and have unlimited reimbursement capability to take a tax write-off for your medical. So now there's some backdoor strategies that have to be used, because if you're already in an S Corp, many of you out there know if you're a 2% or greater shareholder, you can't have a fringe benefit plan for the shareholders. So what we do is we set up our little family management company, a little support company where I hire the kids. I may hire a spouse, provide an HRA, and backdoor in the rest of the family. If you've got rental property only, I may pay a management fee over to an LLC. And now I've got an entity that can support an HRA. So there's all sorts of options for yourself or a spouse, single or married. This is a topic in my book, The Tax and Legal Playbook, which you can get on Amazon. Again, if you YouTube HRA Kohler, you're going to see some good videos there. Now, but before we go on, can I say one more thing on this? Is an example. So I had this was probably the most moving experience I had in regards to the HRA, and this story is almost 15 years old. I mean, the HRAs have been around forever. They've been around. The 105 plan is nothing new. It's just, again, CPAs don't learn about it. I learned about it early on. I remember going to I think it was in Salt Lake. I went to a CE course, one of the most boring in the world. It was on health ERISA law, and I'm sitting there and everybody's asleep. And the presenter, this woman says, yeah, and you can do an HRA and your sole proprietorship for the owner, or, but and I was like, whoa, stop, say that again. And I cracked the code. I figured it out, did a little of research, talked to some other CPAs, and I figured out the HRA is something you can do in any single member LLC or sole proprietorship Schedule E plan for you and or your spouse, and cover all your medical completely deductible. Now that's again without any other full-time employees in the mix. So I'm in my office. This is back in the day when I had more clients meet me face to face, and these clients come in, husband and wife. He's a realtor. She's stay-at-home mom, 5 kids, whatever. We're looking at their return. They had like 30 grand in medical. Now you guys know when you pop that on a Schedule A, you got the 7.5% AGI limitation. He was a realtor making 150 grand, 200 grand. So they were not even getting a full write-off on this 30. I mean, they were maybe writing off 10 or 12 of it after their AGI limitation. And they're like, okay. And I'm like, whoa. Why do you have 30 grand in medical? And they go, well, we have an autistic child and we're paying for speech therapy, physical therapy. They're taking the little bus, just go, all these things, are spending tons of money on this autistic child. And I go, well, why aren't you doing an HRA? And they're like, what do you mean an HRA? And their accountant barely had them in an S corp. Their payroll was jacked up. And I said, well, let's add an HRA and get some of these older kids on payroll, pop that in there. We can write off that entire 30 grand. And they're like, hold on, what? We could write off the whole 30 grand. I've had clients do this with rehab, cancer, kidney dialysis, usually HRA kicks in at about 5 grand in medical, pays for itself. We charge about $500-$600 to get them set up and going for clients, and then they self-administer them. You don't need an insurance company. You don't need anybody. They're super easy. And I said, yeah, you could be doing an HRA. And I go, let's put it in place for this year and let's write all that off. And then now they looked at each other and they go, you mean we could have been doing this the last 4 or 5 years? And they broke down crying. Over 100 grand in medical they could have written off over 3 or 4 years with an HRA, and their CPA hadn't thought to talk about it. You got to bill someone and consult and walk them through it.
Yeah, because I wanted to ask them if you can have it with part-time employees, because nations in places like Texas, to get a self-employed people get PPO, you have to have some employee. So people like me have part-time employees on the book so that we can get PPO. Can I still get an HRA with part-time employees? Because I don't have any full-time.
Yes,
but I have a part-time to meet the requirement to get the Blue Cross Blue Shield, because I have to go to a cardiologist fairly frequently and a dermatologist for some hereditary stuff that I have.
Well, confirm if I believe, Mark, though, if you have a full-time employee so usually for the health insurance, they got to work more than like 30 hours a week. And so I think if they're that high, then they are covered under the ERISA rules. Correct me if I'm wrong, though, Mark.
Agree.
Yeah. So I don't think you would qualify in that case, but
yeah, if you can harness the HRA with the HSA, you're really building the HSA for the future, and you're using the HRA for immediate deductions.
Yeah.
And if 1 year you have full-time employees and you can't do the HRA, you can always ramp it up the year after. Some years you might not qualify for the HSA plan. That's okay. You keep the HSA account just like a Roth and keep growing it. And then maybe 2 years from now, you're qualified for an HSA then, and you refund it. Put in new money, so
yeah.
It's not all or nothing. You can do both plans in a year. You could do one or the other. You can always, use which year works for you. Okay. And then earlier, Eric, you asked about, well, I need to get a PPO, so I have to offer health insurance to at least one employee.
So a part-time person, they declined it because they have insurance with a family member, or they get Medicare.
Here's I'm going to be blunt, is that don't be offended with my bluntness. If
I'm
you're
not
playing
offended.
the game, well, wait till you hear what I say.
They should do real work. Hold on. I have them do real work though. I don't just, yeah.
No, well, here's what I'm saying is that if you're playing the game of, I want to get a group health care plan, and so I'm going to offer it to someone that's going to decline it, or they're really not full-time, they're part-time, then how in the hell are you getting a PPO? You know what I'm saying? And then to turn around and go, but then I'm going to implement an HRA, but not include them. So it's kind of like you're trying to, don't be, again, I'm not trying to be rude. Is it, if they're able to qualify for your PPO plan, that means they're able to qualify for their HRA. Even if they turn down the PPO and then they're going to really turn down a free HRA, I think under audit, it would be really hard to get the IRS over the hump.
I have no problem offering HRA. I just want, that's not a problem.
Well, here's the scary part. If you offer them the same HRA plan that you give yourself, and they show up and go, oh, here's $8,000 in receipts for my root canal. What? Well, I'm not paying that. Well, what the hell? You gave me a plan, because yours is an unlimited plan. That means theirs is an unlimited plan. So whatever you do for yourself, you got to do for them. But then again, if these are part-time employees, I think you would qualify their HRA. I think you're playing games on the PPO. So you got to choose which one you want or not. And I tell so many clients to get out there and find an independent plan that sometimes are better than PPOs. You never know. You shop around and you may go, man, I'm trying to shoehorn my family into this PPO. Come to find out, it sucks. I can get over into another plan that might be better. And so you shop around, you might find a little safe harbor that's better all the way around for your family.
I also have another entity that I'm about to make a lot of money and I can use that for my own HRA. So that I'm a solo.
Well, you've got your affiliated group issues. I love you. I love how aggressive you are.
Okay.
That's why he's
I'll do a consultation. I'm fine.
That's why he's holed up in a hotel in Memphis. That's all I'm saying. Eric's in witness protection and he's got to hide out a little, and that's okay.
Oh man, you make it sound like remember how Huel got held up in that safe house? You make me feel like Huel. I got held up for false pretenses.
There you go. There you go.
I will say one way you could get around the affiliated group rules, right, is if, let's say because you have a few different entities that you're involved in, Eric. So let's say one of the entities you're involved in, you're a minority owner, meaning you don't have control over it. And that's the
ERC group. I'm a minority owner. Yeah.
And if that's where you get your health insurance from, for the PPO side of things, then in that case, you could, I believe, in that case, then go to your main business and potentially do an HRA. I don't know what you think about that, Mark.
It sounds like I need to make an appointment with KKOS. So.
Yeah.
Look, I just gave you a plug.
Yeah, no, I love it.
I haven't done the HRA yet because I want, I need to make sure something that complex. I get cussed, even though I know the rules, but because I have unique situations, I wouldn't just, even I'm professional, I'd like to get a second opinion before I dip my toe in that pool.
Yeah. Well, and see whatever research you do, it's going to allow you to create the solo 401k as well. So the HRA and the solo 401k are like brothers.
Well, actually, you guys said I was disqualified for solo 401k because I had employees in California. So I did a consultation y'all last year. I went through it. I did not qualify. I was sad, but I did not qualify. Yeah, but that's what I appreciate about your firm. You guys are very thorough, but yeah, director already said I didn't qualify. We went through the whole thing. I had people work so many hours a few years ago, so I did not qualify. But that's what I like about you guys are really thorough. So I actually went through that.
Oh, okay. Well, that's good. You run the right answer, even though it may not be the answer you want. And if that's still the case where you'd struggle to qualify for a solo 401k, you'd probably, any of you listeners out there, that's what you want to look at. The HRA is awesome. But the one requirement is having a small business and not an affiliated group with any full-time employees. I like Hsas says, of course, if you're a minority owner of any company, that's out of the equation for the affiliated group test, which is nice. But bringing it back to healthcare, I just think so many people they think it's a dead end. They think it's Schedule A, try to write off medical, 7.5% AGI limitation, and then they give up. And I think if you do have employees and you pay for healthcare, you've got the small business healthcare tax credit. You've got the ability to write off 100% of your health insurance premiums anyway, whatever you do pay for, plus the credit. And you can do an HRA, HSA, one or the other or both. And I think as practitioners, if you just do a little bit of study on this, you can put together a cheat sheet and really charge a client quality time to help them figure out what's best for them. And so I'm a big fan. I love these strategies. I think there's a lot to be made. And had in the healthcare strategy.
I agree. No, I agree with you. All the stuff you said makes sense. And for the non-business owner, you could also, if you want to let the HSA kind of grow, you could always kind of store up your receipts, save them for later, and
True.
at some later date.
I have a
10
high
years
net.
down the
I have a
line,
buddy,
you
high
can.
net worth, that's doing that right now. Because like you say, you can go back as long as you had it from the date of inception. You can go all the way back, and he's keeping a spreadsheet with receipts. He's hoping to stack a few $100,000 before he retires to be able to pull that off. Because then
There you go.
it's one way to fund your retirement. So
That'd be a nice.
I know
early
someone that's doing that.
retirement gift.
Yeah, I know someone that's doing that right now. That's a friend of mine, and he's gonna be able to pull that off.
That was a great topic. I think I can't think of anything else that we need to discuss in regards specifically to HSAs or HRAs, unless you have any questions, Eric.
No, I guess Mark, why don't you now? You're doing the real estate tax summit in Austin, Texas, at the end of September, correct?
Yes, I've got actually between Matt and I, we have 5 workshops between now and the end of the year.
Matt only mentioned 2, so go ahead, share.
Yeah, because the other 3 are mine, so of course he's going to screw me over. But
okay,
no. So all of these workshops, these 5 workshops, I'll rattle them off real quick here. You might put them down in the description, but you can get it to see where all of them are and the details at markjkohler.com. Mark J is in Jolly, KOHLER.com. But if you come to any of these workshops, you're getting continuing education credit as
I can verify that.
A legal professional. Is good stuff. So September 29th and 30th, we're doing the Real Estate Tax Summit, which is 2 days on just tax strategies related to real estate. We're doing some panels, an after-tax party with a live band. If you can get to Austin, it's going to be a lot of fun. It'll also be broadcast on Zoom, and all sorts of different ways to participate in that financially just on the website. Then I'm doing a business owners workshop in October 7th and 8th, just the week after. And that's going to be my 8 steps workbook, where I go through 8 steps to start and or grow your business. And so I go through 4 steps on Friday, 4 steps on Saturday, and lots of tax and legal, some financial planning, business planning. It's really a great thing for small business owners. Then we got our directed IRA summit in Phoenix, the 20th and 21st. And Matt probably mentioned that one. We're going to do a little golf tournament. And also it's all about self-directing. Then in November, I know it's tough. I don't want to do this, but I've got to do a workshop in Honolulu. And so call me a giver.
I've actually been to that workshop before. It was awesome.
That's
yeah,
right.
you know what? Nate just told me about it. When in November is that one? Because I'm supposed to go to a conference in Puerto Rico first week November.
Oh, well, you should make it. It's November 18th and 19th. It's the Friday and Saturday before Thanksgiving. So some people
I might be interested,
stay over for Thanksgiving, make a week out of it, and take a tax write-off for your flights over there, and at least a few nights for my piece. And then, but that's going to be on asset protection and wealth building. So it's more like, where do I put my wealth afterwards? And some really good.
That's when I made the intent, actually, because I've been making money through the ERC, and I have to change my estate situation. I'm not just some broke single dude anymore. I'm still single, but I'm not broke.
I like it. And so that please come, and that'll be also virtually broadcast. And then the last workshop is Phoenix on December 2nd and 3rd. And that's the one where I do my tax and legal update for the whole year. And so it's going to be about every year-end tax strategy to be thinking about in December. Just quality. It's really out of my tax and legal playbook. So It's got a great theme. Now, those 3 workshops, Orange County, Honolulu, and Phoenix, I do like a little 3-part package too. You can attend one live and get the other 2 virtual. So you can get a good deal on that. But anyway, if you get to markjkohler.com, they're all built for you guys, the professional, and good stuff. So
awesome. I look forward to, I'll be at the Real Estate Tax Summit. in Austin and probably at the Directed IRA conference here in Phoenix. So
Yeah, I think I'll be at both those two. Honolulu, I gotta take a look at.
Yeah, be fun.
Austin, I'm likely to be there since I live in Austin, so I don't have to pay for flight and hotel.
Oh yeah, good.
Yeah.
Cool,
Yeah.
cool. Well, I'm grateful to be here with you guys. Thanks for all you're doing to help spread the good word and the power of good tax planning. It's an honor to be on your show, and hopefully I can get back, find another good topic.
Absolutely.
Yeah.
Thanks, Mark, for coming. Eric, you want to send us off?
Thank you, Mark, for coming on CPA Huddle. Thank you, Hsas, for being a co-host, and we will see you soon. Stay safe, and please hire a good tax professional, because otherwise you're going to get hurt starting January 1, 2023.
Love it.